All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. A few challenges back. I discussed the topics that I'm going to discuss here over the next 15, 20 minutes. And about halfway through, one of you sent to me, the talk. And I kind of chuckled. So I titled this The Talk. Just because when it comes to the challenge, I see certain mentalities repeated over and over. And I just want to discuss those as there are many questions in regards to these things sitting in my inbox right now. I have not responded to almost all of them. And basically, this is going to be my response, and I'll shoot this over and the link over in my response, just so that, just so you get kind of the full picture here. But I want to talk about challenge trade mentalities and, some falsehoods and some truths when it comes to the challenge. And we'll take a look at hindsight. We'll talk about change. We'll talk about trade entries and exits, and then this kind of market view. And in fact, let's go backwards here. Let's start with market view. One of the things I got yesterday after I got into the Adobe puts was, why are you buying puts if you feel bullish on the market? What was interesting is the day prior, I got asked why I bought Apple calls when the market vibe turned bearish, right? One of the things that we have to keep in mind, when it comes to the challenge, I'm not playing the market. If I'm playing the SPY or the IWM, yeah, I am playing the market, right? I have that ability. But when it comes to what my market view is as simple as what the market vibe is. But it doesn't necessarily affect my trade decisions, especially in times where, there are things that are going to go up, there are things that are going to go down. Sometimes the market risks are a little higher, sometimes they're a little bit lower. But when I go buy a call, it doesn't mean I'm uber bullish on the market, go buy everything. And when I buy a put, doesn't mean I'm uber bearish on the market, go sell everything. Unfortunately, it's taken that way sometimes, and not by all, but there's no intent for that. It's an individual trade, individual risk-reward scenario, exposure, and go. And it's not necessarily a world view on the market. The fact that I sold my Adobe puts this morning doesn't mean that I'm now bullish on the market and I was bearish yesterday afternoon. It doesn't work that way, and I know that sounds very logical when I say it and when other people hear themselves say it, but for some reason we continue to see this mentality that if I'm in a put, I'm bearish on the market, and if I'm in a call, I'm bullish on the market. You all have access to the market vibe. That has my market view. It's that simple. I don't sit there and stare at the market all day at every little tick and go, ooh, does that tick mean now the market's bullish or bearish? Does that tick mean this? Does that tick mean that? It just, I don't drive myself insane doing that. And so please don't read any of that here into any of my trades. Okay. Number two, trade entries and exits. All right. When it comes to the challenge, I show you what I'm doing. That's all I do. I'm not making any trade recommendations. I'm not making any trade suggestions. I'm not telling anybody else what to do. I'm showing you exactly what I am doing. And I'm trading with live money. I'm trading in real time. And I'm trading based off my own analysis or intuition or idiocy, whatever you want to call it. I'm trading off of, what I'm doing, putting my money at risk and showing what I'm doing. I'm not sending out a trade and saying, hey, everybody pile in at this price, because here's the reality. When it comes down to it, the market has no pause button. And I can get in and the price just go one way, and I can get out, the price go the other. And, Adobe, for example, yesterday, it sat at my price for a little bit, and it was about 5 cents more expensive for a while. I got asked, well, hey, isn't there slippage? How far should I chase it? And, that is something where I don't sit there and make the trade and go, ooh, well, you know what, I would make this trade at 320, but no way would I get in at 330. Right? It just doesn't come. Options move too much. For me to sit there and say, well, I like it at 310 and I don't like it at 330, or I like it at 205 and I don't like it at 207, it's pretty irrelevant. It's just absolutely irrelevant, especially with how much things can change in the short run. And here's the bottom line, is that there are going to be trades that are going where I will get in, and you know what? It's going to be hard to get as good a price as I got. There will be other trades where I will get out, and it'll be easy to get a better price than I did. Apple yesterday, almost every price was better than mine. And, even here today, almost every price way better than mine, right? And so it's one of those things where it does balance out over time. But one of the other elements that happens is somebody will miss a trade. They'll say, you know what, Jeff got in it, but I'm going to wait a little bit, see if it doesn't get cheaper, and then all of a sudden the trade goes, and now they're out. They're on the sidelines, and they're going, well, what should I do? What should I get in? I'll get this email a lot. Do you have any makeup trades? That a makeup trade, that's kind of assuming that I kind of have this money tree planted out back and I can just go and pick from it any day and, absolutely get 100% trade every time so that you can catch up at any moment. It's just unrealistic, and it's one of those things where a catch-up trade could actually put you further behind, right? There's nothing out there in the challenge that says, hey, you have to trade with the exact same amount that I do. When I go buy 5 contracts, there are some that'll buy 10 or 15 or 20. There are others that'll buy 1 or 2. Bottom line is, buy what you're comfortable with. If you've missed a trade, you don't have the same gains, or you missed a trade and now you don't have the same loss, right? And you can up it a little or drop it a little. Run with what you're comfortable with. There's not an absolute need to get the exact same thing, to just get exactly what Jeff got. It's just not realistic in the market. It's not realistic during a challenge. And it's not even realistic with me and my own brother, who will text me and say, hey, I'm buying blah, 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 blah. And I watch, and the order goes through, and I go and try to make it, and I can't get the exact same price. And we're on at the same time. We're doing the exact same thing. We're talking and looking at the exact same screens, right? It's just not a reality. So, as it goes, as far as, entries versus exits and, following Jeff, those will balance out. But as far as missing a trade, it's one of those things where if you miss one that's a loser, it feels really good. If you miss one that's a winner, it really stinks. There's no way to kind of take that emotion away from it, other than to say, okay, you know what, now you can decide, all right, how do you want to go forward? Do you want to trade it with a little less? Do you want to add a little cash? Do you want to subtract a little cash? Do you want to trade it with a little more on the next trick? But just keep in mind that, if you're trading a little bit more to play catch up and the next trade doesn't work, you're actually going to fall further behind. And that's a reality here of the challenge. Okay. The other reality here is I'm going to change my mind on things. It's one of those things where I'll get in and I might get out an hour later, or I'll plan to get out at a certain level and decide, I'm not going to. Or, I may get out a little bit early due to something or something else. It's one of those things that over the years, I've been asked to predict what I'm going to do and then message it out to the community what I'm planning to do over the next 24 to 48 hours. Well, it's trading. The market changes. Price action happens. I can't even sit here and try to predict what I'm going to do. There's so many different scenarios that could happen. It's like when I'm looking at a trade to say, hey, you know what? I want to get in this. So right now, for example, Micron, right? I would like to get into Micron, right? And I made that comment and earlier this morning and discussed Micron a little bit. And one of the emails in my inbox said, "What are you looking for to get into Micron?" Well, I'm watching the stock, right? There are 15 million different scenarios and different things that could happen. There are a handful of things that if they happen, I'll look at it and go, you know what, the odds are in my favor. There are also a bunch of things where I'll look at it and go, I don't know what to make of it. Right now, today, I don't have a clue what to make of it. So I'm not going to get in. It could go up. It could go down. But it's not giving me something that I find to be highly predictable because I like to see big volume. And so far, we're just not seeing that today, right? And so I'll continue to wait. I'll continue to sit back. And it does mean maybe I'll miss it. So, as far as what exactly am I looking for to do exact things, the market's always changing. The market's always, doing things a little bit differently, different news, different price action. And so I'm watching and I'm looking back, and really for a challenge trade, I'm just wondering, do I have an opportunity here? Do I have something where the risk reward is in my favor and there's some level of predictability here that I can get behind? But, I don't obviously have that magic 8-ball to be able to say yes, no, up, down, all of that. Okay. So then that takes us to our last element, and it's kind of two-parter here. Let's start with change. During the course of a challenge, and this has happened many times over the years, I will get emails and really good suggestions on how to change up the challenge format. We could do this, or we could do that, or if this game does this, then we take out this, and if this loses, then we do this. And some have really sent me some very detailed stuff of how to manage it and everything else. In fact, several who worked for me with Trader Minute early on had some really interesting ideas as far as that goes. But here's the reality. The way that I run the challenge, the way that it's constructed, when I've hit 100K twice, it's the way it was at those 2 wins. And so my pushback has always been, okay, those changes, they sound really cool. They sound really good. I love them, right? But prove to me they'll work. I haven't seen that yet. So I'll stick with how I construct it. Not that another way of changing it up is negative or wouldn't be very, very good, but I'm going to stick with what I've seen work and will continue to do so. That said, we hit 100K this challenge. The next challenge I'll put a couple curveballs in it because, you know what, that's what I like. That's what I would prefer to do. I kind of... many of you heard me. I'm waiting to hit 100K on the next challenge to put a couple curveballs in, just because to change it up a little bit. But for now, it's going to be what it was, and what you've seen in the rules and guidelines of a challenge. Now, last but not least, and I put this last because every time I talk about this topic, I'm accused of coming across negatively. And my response generally is good, because I am very negative on this, and that's hindsight. And it is something that affects every trader, myself included, and it is something where every trader can be just completely shredded mentally because of this hindsight element. And it's one that how each person deals with it is basically, their way of dealing with it. But here's the way I deal with it, and here's my response when it comes to being asked hindsight questions. It is very easy for me to sit here today and say, yesterday I should have done this, 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 and this. And I should take this lesson and that lesson, and I should do this and do that. I should have done this. I should have known that. It is so easy to do. Because what do I have? I have today's knowledge that I'm applying to yesterday. And if I'm constantly sitting here taking today's knowledge and applying it to yesterday, what's that going to do? Yeah, it's going to throw me in the loony bin. It's going to put a straitjacket on me. It's going to lead to a lot of frustration. Is it going to lead to any trading or anything positive going forward? No, because what's the real challenge of trading? It's taking what you know today and applying it to tomorrow. And you know what? Those 99% that aren't trading with you, they're going to take tomorrow's information and judge you based on that instead of judging you today based on today's information. And so for myself, I have to ask myself, Jeff, you made this trade. This is how it turned out. This is what happened. Would you make different decisions knowing what you knew then? And if I can say, yes, I would have made different decisions knowing what I knew then there's something to learn. If I look and say, you know what, knowing what I knew then, there's no new decision to be made, then forget it. Because the bottom line, we're never going to know today tomorrow's information. Today, we're always going to know yesterday's information. And so it's one of those things where, you stick with what you know, you stick with what you do, and it can be hindsighted to death, and we can always say, oh, man, I should have done this, right? I have several emails in my inbox, and you guys know who you are, and it's one of those things where, why didn't we hold Apple? One of you, and I'm calling you out because I know you'll get a crack out of it, you'll get a laugh out of it, but one of you has been emailing me for a year telling me I should take profit sooner. And so now following it up with, hey, why didn't we hold it, right? So it's one of those things where, yes, if I knew yesterday that Apple was going to go to where it is today, I would absolutely be in. But here's the other scenario. If I were in Apple, there's no way I'd trade Adobe. If I were in Apple, there's a chance I might have gone out and maybe bought some Tesla yesterday. I don't know. Had I not even gotten into Apple in the first place, there's a chance I might have chased Chipotle and it had gone down. There are a million different scenarios that could have happened had I not exited Apple or had I not entered Apple. And I can't say what those are. I know there are infinite number of possibilities. So for me to sit here and to apply hindsight, to apply today's knowledge to yesterday's decisions, that doesn't help. That doesn't do anything for a trader's sanity. It doesn't do anything for a trader's education, and it doesn't do anything for a trader's profits going forward. And so for me, I look at every trade and I say to myself, knowing what I knew then, would I make a different decision? If the answer is no, I move on. But if I try to say, knowing what I know today, would I make a different decision yesterday? I'm playing a very frivolous game. I'm playing a game that just has no bearing on anything to do with trading in the markets. And that's how I look at it. And so if you hear me come across a little salty when it comes to hindsight, that's a big reason why, because we can judge hindsight in so many different ways, and it is the way to take a good trade and turn it negative. It's a way to take a gain and make it feel like a huge loss, and it's a way to take a loss and make it feel like a gain sometimes too. So it just doesn't really have a lot of bearing on anything. What does? Risk-reward exposure. Risk-reward exposure. And, hey, what are some of the probabilities? And so, great. You know what? Cashed out of Adobe today. Decent gain. All right, I'll take it. I really want back in, right? And I'll go, come on, Adobe, please rally a couple bucks so I can get in. I may be being too picky. And you know what? If Adobe drops $5 on Monday, yeah, I'm too picky, right? But if it rallies $5 on Monday, oh, man, that was a good decision to get out, right? I don't have that information about Monday today. So I make the decision with what I know today. Today, I have my kind of plan of action on what I'm looking for if certain things transpire. And if it happens, I'll run with it and move on and go. And so anyway, that's, those are some of the mentalities here when it comes to the challenge that I want to challenge you on. Again, the challenge is a game. The challenge is a low risk, way to get some exposure into the high risk world of short term trading, option trading, and to have a potential reward that's much greater than the risk. And it's a game that I love. It's a game that I think gets a little hyper-analyzed. It gets a little over-analyzed in terms of each and every small decision, by myself included. It's just natural when it comes to the market. But it's a game about, good risk-reward, good exposure, good probability, and letting the chips fall where they fall, knowing that the odds are in our favor. Thanks for hopping on. Have yourselves a great one. I'll be back shortly to talk about some of the things going on out there in the market. We'll talk to you then. Take care.